All right, what are we? What am I? 1-3. 1-3. Hit me. I think I won. Welcome to the closing beat, everybody. The tide is changing around here. After a rough start, the tide is changing. I hope you guys had a great weekend. Let's figure out all this. And welcome back. By the way, my first weekend of little sports betting for the 2022 season. Oh, alleged sports betting. Yes. I down a little bit. I was doing great until the Cowboys last night. I said, well, let's give them a shot. Let's give them a shot. Somebody said it was a close game last year. So you know what? Let's give it a shot. So I'm in the hole, $16 at the moment, but that's okay. Is there a game tonight? Do we need to open up tips? Yeah, people can leave money, support my habit. All right, so we got a game tonight, and I got a strategy, to be honest with you. You guys, I won't tell you the strategy. Nobody really cares. You're here to talk about the stock market, and on the right-hand side of your page, you can see another green day. All right. Nice. Right? That's a good thing. Well, everything I read this weekend was about a recession is still a real possibility. It was like everybody got to get what? What's the problem? Recession is a real probability. It's like everybody agreed to say the same thing. I don't understand. Well, how did we all come up with the same thing? And also, aren't we in a recession? So it technically already is a recession. If we don't call it a recession now, what will we use to call it a recession? So really, really tricky there. I was getting a little fired up this weekend, but nonetheless, with some of the comments from Fed members out there, you have the concept of weakness potentially still ahead. And we'll see what happens. We got inflation numbers coming out tomorrow, and that will be what allows us to see what happens there. We're expecting a 0.10% decline month over month. And I was playing with this over the weekend. If you're a client or research member, go in the notes from Jazz, check this out. I went through and said, well, what does that mean timing-wise? If we do see a decline of 0.1%, okay, how long until we get back to a reasonable inflation rate? What happens if we lose 0.2%, 0.3%, 0.4%? And I actually plotted out in the future to show you how long would it take for inflation to get under 4%, down under 3% and such. And we're basically looking at the first quarter of next year into the summer of the year after. At this pace, if we see tomorrow we have a 0.1% decline month over month in inflation, then it will be the latter part of the summer next year. So just to put that into perspective, inflation won't be down by Christmas, right? It may be falling by Christmas, but it won't be down by Christmas. It depends on how fast we actually still decline. Now, I happen to think we'll see numbers come out more aggressive than 0.1% tomorrow. I think we'll fall a little bit more than that. You gotta, looking at oil, real estate prices, things like that, the core CPI number has gotta give us more than that, right? I don't know. We'll see. Anyways, in the notes from Jazz, I plotted out different scenarios to show realistically how long would that take, and of course, you're welcome to check that out. As far as the S&P goes here, ta-da! There's the S&P. So here's an interesting stat. Friday, we gained over 1%. And that's a big number. Markets don't usually gain or lose 1% in a day. Average is 0.16%, so that's a well above average move. Well, that's the 22nd time that we finished a week with a day that was greater than 1% or less than 1% there. That means that if we just go all the way back here, that is 61% of every end of the week finished with a 1% plus or minus day. That's a record. The last time that happened, or even came close to happening, was 2008, where 50% of all days that ended the week, could have been a Thursday, but in this case a Friday, were days of 1% plus or minus. So the volatility is there, right? We say, oh, traders like that volatility. Well, you got no excuse this year. You have your volatility. So really, really interesting to see that. You're not disappointed so far there. And one of the things that I did, I want to share with the S&P just to bring some currency to it. I drew this out in our notes from Jazz, but technical traders will look at this. I'm going to take a second on this because this one's going to be important over the next few days. Here we have a downtrend, big, long downtrend, right? And here we have a really short-term but kind of exciting uptrend. It's working its way there. And that's the technical pattern that people are looking at if you like to look at technicals. Now, don't worry, I'm going to get the fundamentals in here in just a second. You see what we're drawing, right? Okay. Which do we trust? If you had to bet, do you trust this uptrend and be a buyer, or do you trust this downtrend and be a seller into rallies, or be patient on rallies and not buy anything? Well, technical traders always trust the longer term pattern. If you are a, what do they call them, a CTA or chartered technical analyst, I don't know, it's stuff, licenses and stuff. You will always look at the long term pattern. The long term pattern always wins, which is why we put so much emphasis on the 200-day moving average, right? So the short-term pattern will not win in the short term. At some point it will win, but we have a rally going up to a much bigger or longer downtrend. And so that gets the attention. This is why everybody's short-term targets in the S&P happens to be right around the 200-day moving average. So if they didn't explain this to you, that's how they come to that, right? And so that's where we stand. Now, this leads the market into a moment where it's going to have some big up days and big down days, but probably not be able to break above that uptrend there. Why? For technical traders, there's no good reason to do that. There's no good reason for the market to continue moving higher, at least at the moment. That could change over time, but for now, that's what we have. Now, for fundamental investors or traders there, right here, if you were to take the forward earnings, the current aggregate earnings, I should say, of the stock market, right at this point, you'd be at 18 times earnings. Is that a big deal or is that not a big deal? That's where resistance has been each time the markets have rallied, about 18 times earnings. So that's a fundamental resistance area, matching up with a technical resistance area. Well, how do we analyze the market? You either believe in the charts and things that you see, you believe in the numbers and the financials that you see from a company, or some combination of both. There's not much else. So if we know that both participants, major participants in the market, will see this area as a known ceiling, stopping point, concrete ceiling above, we have a hard time getting through, then you got to respect that, right? It doesn't matter how much money you have, you're not going to mess with the masses there. So I just wanted to point that out. I'm going to leave this here over the next couple days and weeks so we can see how we're going to get going here. But nonetheless, expect that we see every pullback from here create the concept in people's heads or the comments, it's a crash, we're falling again, some sort of crash, we are going to fall apart, it's going to be a crash. Well, no, you can't actually make that comment until you break this, until we see that the downtrend holds, and then you actually break down there. So there's got to be something, in other words, is what I'm trying to say. And the trouble is, there's nothing really besides inflation and the Fed to go on. If inflation is lower, you would think that the Fed might be able to slow down. However, if it's only down 0.1%, they're not going to stop anything. But if it's significantly lower and continues to be lower, which remember is month after month after month, then you would expect stocks to be able to challenge the upper portion of that downtrend, and we can analyze from there. All right, I rambled on just a little bit too much for you. Sector-wise, if you look at the stock market, all 11 sectors finished last week with gains on the week. I want to point out something interesting here that maybe nobody else will, because you're nice enough to hang out with us here. Here is the basic materials that had your best gain over the last 5 days. Remember, that would include last Friday because Monday was a holiday. 4.9% over the last week. That's your best performer. Consumer discretionary, 4.81%. I haven't mentioned tech yet, have I? We have financials in third place, actually getting stronger by the day, 3.65%. I haven't mentioned tech yet, have I? Healthcare was one of the, it had the biggest move week over week, but it didn't have the biggest gains compared to the others. In other words, it moved, it had the biggest range from its lows to its highs. So healthcare wins on that respect. Up 2.9% for the last 5-day period. I haven't said tech yet, have I? You got energy. That one comes in fifth place there, 2.65%. Utilities, 2.6%. Real estate, 2.4%. I haven't said tech yet, have I? You get the point that I'm making here? Normally, we look at the stock market, and given that tech has basically a 25+% weighting in the stock market, you'll hear me say, we need the tech sector to have a good day or good week or good month in order for the stock market to go higher. But what happened? Everything else had an incredibly good 5-day period. And tech was down here. Last week, tech gained 1.93%. Communication services, which is also seen as somewhat tech, 1.3%. We didn't have tech leading the way. That's odd, right? The rest of the market, basic materials and consumer discretionary financials, all had such monster moves relative to tech that the stock market actually put up a little bit of green there. Now, the lesson there is look at how much effort the other sectors had to put in place. Energy is like 4% of the total market. It needed to gain 2.65% to even have any say in what the market did. Basic materials and consumer discretionary and stuff, they had to gain basically 5% in order to help lift the market from what tech down here wasn't willing to help with. Very fascinating there, huh? Very fascinating. I hope that continues because what would that signify? Think about it. If the rest of the market is continuing higher, but tech is just sort of plugging along, you could say that money is shifting elsewhere in the market and that the money that's in the tech sector is just index level investments, people that buy the whole index and say, well, forget it, just buy the index, right? So the rest of the market is now getting more and more money, in particular, healthcare and basic materials, right? So little lesson there, something to take a look at. Anyways, moving on. As far as new highs, new lows today, it was all utilities. Some interesting patterns here for utilities. You know now that was one of the stronger areas. I talk about Con Edison. We'll also bring in CenterPoint Energy there. And the other one that looks very similar is American Electric. There were no new lows, so we can skip over that one there. All right, as far as stocks in the news here, I got a couple cool things for you today. You might be interested, a lot of people like to know what Warren Buffett's doing. Occidental Petroleum, Berkshire Hathaway increased their stake to 27% from 20%. They are very happy and would like to get a majority ownership of, they did get approval to be majority owner of Occidental Petroleum, and they are obviously making good on that. Apple, JP Morgan said their pre-order data that they got a hold of there says that there are strong orders for the iPhone Pro models. Remember, there's no price difference anyway, so it's not as exciting as it used to be. Pool Corp. Familiar with these guys? Barron's talked about them and said pool maintenance is going to be a big deal to help support the stock at this current level. Oops. Okay, yeah, we're good. Tesla, there you go. Trying to break out above highs there. It's been kind of a choppy mess. Almost looked like Amazon for a while there, but anyways, that's what you got there. Tesla got a Wall Street Journal report that said they are looking to, or are possibly starting to build a lithium battery refinery out in Texas, kind of Texas, Oklahoma area there. Robinhood, I thought this was pretty cool. So Robinhood launched their client index, if you're into that sort of thing there. It's a new index constructed by Robinhood, which weighs stocks in a portfolio relative to their customers' conviction or relative frequency that the shares are held in customer accounts. I point that out in the geeky way so you can kind of understand what's happening there. They're basically going to weight the stocks in a portfolio, or in an index, they're calling it, of stocks that their clients like to own. Here's the question. How many people at Robinhood do you know that make lots of money and perform really well? I don't know a lot of people, so that could be a tough one. Could be a tough one there. Lastly, I'll throw in an additional one, Uber. So Goldman Sachs has this conference they're calling the Communicopia. It's part tech conference, part communication services conference. They just meshed them together and they call it the Communicopia, I think is what they call it. So I've been seeing a lot of the data coming out of that one there. The one for Uber, they've got a lot of cool things that are really starting to look good for them. And that hurts to say that, like I thought about that before I said that. The one was they were thinking about using some of their cash to buy back shares. I don't know about that one. Maybe reinvest in becoming more and consistently profitable. But nonetheless, if they do decide to buy back shares, which the CEO said they're leaning towards doing, well, that'll drive stock prices higher for you. Yeah. Okay, I'll take your questions if you have any questions. Otherwise, I think we did the trick for today. All is good. Everybody's happy. We're looking right. And we will go from there. How do I look today, Swamp Rat? I think it's the lighting. Right here. Nope, right here. See that lighting? I'm going to get Cody to work on that. Freshen this up a little bit. Jason, how we doing? Good to see you there. Your friend's 8 times his money in a couple months in Robinhood's. Bought a Camaro. Oh, man. Why wouldn't he just keep multiplying his money and buy a Bentley? Why stop at a Camaro if you're 8 timesing the money? Hey, Dustin, who do you use for your cell phone provider? Who do I use? Metro? Metro. It's a company provided thing, you know. So, right? Does the company pay for this? No, actually. Why do? Yeah. Yeah, Metro, I think, is who we use. I'm very confident that that's who we use. But it should be paid through the company. Thank you for that. Auburn Mail, yeah, killing it there. Basic Material, they're leading the way in that space there. Any makeup recommendations for looking that good on camera? Man, if you think there's makeup on this pig, come on, man. That's nice of you, but there ain't no makeup here. Pretty puffy eye the other day. Better hair. Really? Wow. It was pretty rainy the other day too, man. I'm a naturally curly guy when it gets rainy. Girlfriend, oh, he wanted to flex with the Camaro, huh? I'm just saying. I could tell you guys a story one time when we'll just do like story time where I hit a streak trading with the Chinese group that I used to teach. I used to have to trade in front of them and show everything and all that. And I hit a streak and I kind of went nuts myself. Yep. Fun story. Are you not going to tell us about the not for Dustin? Yeah. Are we not talking about that? You said the show. Oh, so I don't actually know what it is, Ashraf. Cody did open it, and I asked about it today. I saw the envelope, and he said, no, we do our team meeting on Tuesdays. He said he was going to bring it up then. So I'm guessing it's something embarrassing because, no? I'm going to lose sleep over that. Guess the Dow. You guys want to play Guess the Dow? Is that a thing? Can we do? Oh, he looks at me like, oh, I don't know how to turn it back on actually, but could we do it? Yeah, we just haven't thought about it. Tomorrow, big day for inflation. I think inflation will come in lower than expected. If we had to have a friendly alleged bet on that one, I would say it's going to be lower than the 0.1% decline. Yeah. You think stocks will go down further? Well, we kind of highlighted that with the range in the S&P, so I think that's what we're working with. Yep. Oh, MW, that story just gets better and better. He's one step away from selling a course on how to buy a Camaro by trading the stock market. Oh, man. Well, Deco just joined, so we're going to wrap it up there. Thanks for joining us here, and we'll be back tomorrow to do it all over again. I hope you enjoy the rest of your day or evening. See you then.